Imagine you're at the checkout line, and as you swipe your card, an invisible hand slips into your pocket, taking a portion of your hard-earned cash. Sounds outrageous, right? Well, it's happening to millions of us daily, thanks to hidden fees lurking in the products we use from financial institutions. Today, we're diving into the underworld of these stealthy charges and how they're pocketing profits from your ignorance without you even realizing it. Let's start with a simple truth. Financial institutions thrive on complexity. The intricate terms and conditions, often presented in tiny print, are designed to obscure rather than clarify. Within these densely worded documents lie hidden fees that quietly chip away at your account balance. Whether you're banking, using your credit card, or investing, these fees can appear harmless at first glance. But don't be fooled. They're expertly crafted to slip under your radar while your financial institution reaps the rewards. Take a moment to consider your bank account. Perhaps you think you're in the clear because you don't see any obvious charges on your monthly statement. But beneath the surface, there could be a myriad of fees waiting to ambush you. Maintenance fees, atom fees, overdraft fees, and transfer fees. The list goes on. Each of these charges might seem minor on their own, maybe just a few dollars each month. But over time, they add up to a significant sum that could have been put to better use elsewhere. Now, shift your gaze to credit cards. You might have signed up for one with attractive terms, no annual fee, a low interest rate, and even some enticing rewards. But hidden in the bowels of your agreement are fees waiting to pounce. Perhaps it's a foreign transaction fee that tags along whenever you make a purchase overseas, or a late payment fee that's ready to penalize you the moment you miss a deadline. These charges are structured to appear inconsequential, but can accumulate faster than you might anticipate, especially if you're not keeping a close eye on your billing statements. Investment accounts are another arena where hidden fees lurk in the shadows. You might be familiar with management fees, but what about performance fees, custodial fees, or early withdrawal penalties? These charges are embedded in the fabric of your investment products, often masked by impressive returns or complicated fee structures. They're designed to siphon off a part of your profits, ensuring the institution benefits regardless of your portfolio's performance. But how do these fees remain hidden, and why don't we notice them? The answer, in part, stems from the psychological tactics employed by financial institutions. These tactics are designed to gloss over the true cost of their products, creating a smokescreen that clouds our understanding and reduces our likelihood of questioning the charges. Studies have shown that many people tend to gloss over documents filled with financial jargon. It's a natural response. Our brains are wired to avoid what we perceive as overly complex or tedious. Financial institutions capitalize on this aversion by embedding fees within dense text or using terms that sound innocuous like service charge or maintenance fee. These names don't inherently sound punitive or expensive, leading consumers to underestimate their impact. Another tactic used is the anchoring effect, where big numbers are juxtaposed with smaller fees to make those fees seem negligible. When you're promised potential returns of several $1,000s, a 30 fee buried in the details suddenly seems trivial. Your brain is anchored to the larger figure, making the smaller one easier to dismiss. Furthermore, there's the problem of temporal discounting. This is a psychological phenomenon where people are more likely to prioritize immediate benefits over future costs. Credit card rewards programs are a prime example of this strategy at work. The allure of instant cashback or travel points makes us less likely to scrutinize the associated fees that might pinch our wallets in the long run. We become focused on the immediate gratification, often at the expense of our overall financial health. So, how do you fight back against these invisible charges? It starts with awareness and education. Recognizing these hidden fees and understanding the mechanisms that keep them concealed is crucial. By shining a light on them, you take the first step towards protecting your finances from unnecessary depletion. In the second half of this video, we'll dive deeper into expert strategies that can help you identify and mitigate these pervasive fees. We'll arm you with the knowledge you need to scrutinize every line on your statements, question every charge that doesn't make sense, and ultimately make informed decisions that protect and grow your wealth. But for now, it's important to acknowledge the reality: hidden fees are everywhere, and they're banking on your ignorance. Let's make sure you're one step ahead. Let's delve deeper into the psychological tactics financial institutions employ to keep these hidden fees out of sight and out of mind. Studies in behavioral finance have revealed that many of these tactics are meticulously designed to exploit cognitive biases and human tendencies. One such bias is the complexity aversion, where individuals tend to shy away from engaging with information that appears intricate or overwhelming. Financial institutions play into this by constructing agreements that are not only lengthy but also filled with technical jargon that can be off-putting to the average consumer. Moreover, these documents often bury the details of fees within blocks of text, using language that minimizes their perceived significance. For example, a fee might be described in terms that sound necessary or routine, such as account maintenance or service enhancement. These euphemisms make the fees seem like a standard part of the service, reducing the likelihood of scrutiny. This semantic camouflage effectively prevents consumers from recognizing the true cost of their financial products. Another psychological tactic at play is the status quo bias, which is the tendency for people to stick with their current situation rather than making a change. Financial institutions bank on this inertia. They understand that customers are likely to continue using their products even if they're aware of the fees, simply because they want to avoid the hassle of switching to a different provider. This bias is further compounded by the effort and time required to understand and compare the fee structures of potential alternatives, which can be a daunting task in itself. So, how can you break free from this cycle and protect your finances from being silently eroded by hidden fees? The key lies in adopting expert strategies that allow you to identify, challenge, and ultimately mitigate these charges. Begin by making it a habit to thoroughly read the terms and conditions of any financial product you consider. This might sound tedious, but understanding the fine print is essential. Look for clauses that describe possible fees, and keep an eye out for any language that seems deliberately vague or open to interpretation. Next, consider leveraging technology to your advantage. Personal finance tools and apps can help you track expenses and identify patterns in your spending, which is invaluable when it comes to spotting unexpected fees. These tools often categorize your transactions, highlighting charges that might otherwise go unnoticed. By regularly reviewing your spending reports, you can catch any irregularities early and address them with your financial institution. Additionally, don't underestimate the power of negotiation. While not all fees can be waived, many financial institutions are willing to reconsider charges if you ask. This is especially true if you're a long-standing customer with a good track record. A simple call to customer service, armed with a clear understanding of your account history and the fees in question, can often result in reductions or eliminations of certain charges. Another powerful strategy is staying informed about the competitive landscape of financial products. Financial institutions frequently update their offerings and introduce new products with more favorable terms to attract customers. By staying alert to these changes, you can switch to products that better align with your financial goals and have lower associated fees. Remember, loyalty to a financial institution should be based on the value it provides, not on convenience or brand familiarity. It's also crucial to develop a mindset of financial skepticism. Question every charge on your statements, no matter how insignificant it may seem. This practice not only helps you become more aware of where your money is going, but also conditions you to be more vigilant in the future. If a charge does not make sense or was not clearly disclosed, don't hesitate to reach out to your financial institution for clarification. To further empower yourself, consider seeking the guidance of a financial advisor. While this involves an upfront cost, a professional can provide insights into the fine print and help you devise strategies tailored to your financial situation. They can also offer a more comprehensive view of how to maximize returns while minimizing fees, making the investment in their services a savvy decision in the long run. Finally, education is your most potent weapon against hidden fees. Continuously educate yourself about financial products, fee structures, and consumer rights. The more informed you are, the better equipped you'll be to make decisions that safeguard your wealth. There are countless resources available online, from articles and videos to courses and webinars, all designed to enhance your financial literacy. As we draw this discussion to a close, it's crucial to acknowledge that hidden fees will continue to exist as long as there's a lack of consumer awareness. But by taking proactive steps, you can protect your finances from unnecessary depletion and keep more of your money working for you. Remember, financial institutions are banking on your ignorance, but with the right knowledge and strategies, you can turn the tables and use their products to your advantage without falling into their fee traps. If you found these insights valuable and want to continue learning how to build and protect your wealth, make sure to subscribe to our channel. By joining our community, you'll gain access to a wealth of resources designed to enhance your financial acumen and empower you to make informed decisions. Until next time, stay savvy and take control of your financial future.